not only saying that how much return, but how much sustainable return, because that will stay and may further increase, given that there will be more emphasis from a regulation standpoint, from investor standpoint on these issues, and therefore the ones that are prepared will have a good time later on. So overall, ESG investing looks at these three things. One is planet, people, and profit. Anything that has a material impact on the financial performance of any company, that needs to be taken into account, because that could be a risk, and how company tackles those risks could turn out to be an opportunity for those companies. So I think, I hope everyone believes here that climate change is happening for real. It will have its impact going down the line on the economy, on the companies. Say if there are companies which are closer to coastal areas, the sea level rising could cause repercussions to their operations and stoppage to their operations, and therefore have a hard time if they're not mitigating or diversifying the risk. So climate change, pollution, water is another critical element of our evaluation. Waste is another critical element of our evaluation. So companies that are prepared from an environmental standpoint, looking at climate change, pollution level, water, waste, are kind of good companies. From a people or social perspective, companies that have good diversity. Again, cyber risk is becoming very, very real. Companies are having to pay a very high ransom amount if they are under an attack. And therefore, if companies are not secure enough from that threat, then they will have a very tough time. So all those companies who are taking that into account and taking that very seriously will kind of emerge as winners going forward. Also, governance has always been important. If how the company treats minority shareholders, what is the business ethics of the company, is the board really independent or not, or do you have friends and family sitting on the board as independent? Then minority stakeholder rights are always under pressure or under question. So looking at governance aspect of companies has always been important. There have been so many instances in Indian corporate area that because of poor governance, investors lost a lot of money. So when it comes to a company that is looking at all these three aspects as really a quality company, ESG evaluation is a mark of evaluating quality of any company, and quality as an investment generally does well over the long run. So if you look at ESG, is one of the fastest growing investments globally. There are more than 3,800 investor signatories who have signed up for PRI. They represent around 121 trillion, and incrementally they are incorporating ESG in most of their investments. So if you look at the assets under management have been continuously climbing, the number of signatories have been climbing, and most of the big investors have said that incrementally they will incorporate ESG. And it's not charity. In ESG is also about investing in quality companies, companies that are prepared for tomorrow. And we have seen ESG do better over the long run. So if you look at two indexes of India by MSCI, the MSCI India Index and MSCI India ESG Index. If you look at MSCI India ESG has outperformed significantly the MSCI India Index, which is a normal market cap weighted index, and telling you that ESG outperforms over the long run. And also, if you see times when markets have fallen, ESG has generally fallen lower than the market declines. For example, in 2011, the MSCI India fell by 37%. The ESG index fell by only 31%. So time and again, we have seen that it generally falls lesser, like also in 2018, when MSCI India fell by 7%, the ESG index fell by only close to 3%. So generally, we have seen even during the COVID period, we saw ESG indexes had lower downside as compared to normal market cap weighted indexes. So ESG also does well when it comes to performance. So even if you look at our experience in the Quantum India ESG Equity Fund, which has a very robust process, a proprietary process, a proprietary team, a big team that looks at ESG aspects in detail, has led to our outperformance over close to a 4-year period. So if you look at our since inception return have been about 16% CAGR, whereas Nifty 100 ESG index is just 14.7, and BSE 30 index was 14.5%. So we have done better over the long run. There was some impact to ESG kind of companies in 2022, where we saw value stocks doing well and ESG not doing well. Again, this year we have seen a bounce back in performance. So we think that ESG does well, and it complements the value investing very, very well. So if you see, both have complementary performance. So if you are allocated to ESG and value, you have a very good complementary style of investing that balances out your risk and return in a bigger way. So with that, I think these are the two effective strategies that you could add to your equity allocation, so that you have a very differentiated styles of investing, the value investing and the ESG investing, and that completes your overall opportunity set of equity investing. So with that, I will urge you to look at both these funds and add it to your portfolio to make it a complete allocation to equities. With that, I will hand it over now back to Neeraj, and we'll be happy to answer.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.